on this discussion Mr. Kanabi Frank from Mitro Plus as a financial market analyst. A very enthusiastic young man here to break down for us some of the mysteries that confuse gambling and trading. You're most welcome, Mr. Kanabi, to the show.
Okay, thanks. My name is Kanabi Frank, the way he has uttered out. So Kanabi Frank is a crypto analyst. Kanabi Frank is a businessman as well. Kanabi Frank is a person who came to love trading out of the will of my own boss, the CEO that is well known here in Uganda, the one Sam Festo. I think when I utter out that name in the trading industry, you can all relate to that guy. You know, the guy who drives the most latest cars in Kampala here, Sam Festo. You know, the I-8 guy, if I'm to say that. So this is the guy that I met when I was just out of school, looking at his lifestyle, the way he lived. I started to pick interest in what this guy was living like, and actually I tried to start learning, and he was a good guy to me, that he happened to allow me learn this freely. He taught me how to do this, and after being taught by him, I came out as an expert. And right now, when I analyze the market, I do not think that there is any other trader here in Uganda who can do that.
Okay,
I'm sorry for me to say,
that's quite
but that's it.
Fascinating. Like I said, you are very enthusiastic about this.
Yeah.
But where does your interest start? When did you start really getting interested? Because in Uganda, we have a mentality of you go to school, get your job, and probably get to go to further education. But few people get interested in this because, first of all, it's not taught in schools.
I understand.
That is one. So how did you pick interest in learning more about analysis?
Okay, before I say that I picked this to learn analysis, I'll first tell you this. First of all, I was already in business, in a family business. But I came to learn that here in Uganda, if you're selling something, you have to convince a lot for someone to do what? To buy. And I'm that type of a person who doesn't want to convince someone a lot. So when I came to see trading, whereby it's only your skills that limit the amount of money you make, that drove me to something like, let me further do trading, because there I won't beg, I won't be advertising. Here I can just come in with my own money, invest the amount, then I go. Within a few hours, I've already gained profits. So I came to understand this as a business, not as a gamble. Now, the problem with Ugandan is they come to trading just for the purpose of making quick money, not learning. But this is a profession. The way a doctor goes to university 5 years, the same way a trader has to go through lessons and classes, years, and then they get qualified, as I do right now.
Wow, interesting.
Yeah.
Let's pick up from what constitutes these two, trading and gambling. Financial markets are quite multifaceted.
Okay.
We have cryptocurrency, we have forex trading, we have fixed income stocks, and some of these things work together. In other words, a movement in the stocks could influence a movement in crypto, or vice versa, right?
True.
So how do you relate with all this? I know from your personal experience, you have been exposed to different situations.
I understand.
But how do you define, where do you draw the line in terms of trading and gambling? Because also, why people think it's gambling, I'll be very honest. People think, for example, I buy a stock today, Apple stock, let's say, and I'm hoping the stock will go up, and I'll sell. That, to me, or to some people, might look like gambling. But in your own personal experience, where do you draw the line between what people call gambling and actual trading?
Okay, now, what makes trading gambling is that anyone comes in after learning that when it does this, it's going up, or when it does this, it's going down, then that's what they are going to follow. But this is the strategy. For trading, someone must be able to look at these charts, understand that around this line where exactly it's drawn, it's around the neutral point, call it the point of equilibrium at the charts. You have to be able to tell that the moment the market reaches here, the force by which it came, it is going to be propelled back into the same force to the upside. But now, for other traders, all they know, it's going down, then they do sell.
They sell, yes.
Now, the moment you do that, you're gambling. But for us who are traders, we normally wait and buy in when the market comes to us. You see, for me now, right now, I have a position which is running currently on BTC.
This is what? We can tell our
Now, this is Bitcoin chart.
Okay.
Right now, for those who think that trading is gambling, that's not the case. Remember, for gambling, you go there by luck. By luck, you're buying something and then you pray to God it goes your way. But for trading, I can come into markets, I do buy in, but 100% sure that it's going to go there because it has some analytical backups. It has some scientific backups, which allows this to work out the way I need it. For example, let me give an example still on this BTC chart. Right now, BTC gave us a move to the upside when it was trading around here. But there is a reason as to why this happened, and there is a reason as to why many traders decided to buy in here. Professional ones, not gamblers. They decided to buy in here simply because they saw that we do have an imbalance of candlestick here, which represents buying liquidity and buying money. And when price came to mitigate this imbalance around here, the huge candlestick, then price had to start a move to the upside. So there are things that we look at before we do take a decision in trading. We do not pray to God that they let it go my way. So this is out of profession, out of experience. Right now you're seeing that I have a tool drawn in. It's called a pitchfork. It's delayed from the third law of motion. This law states that
action and reaction
are equal. Yeah. Okay, this is how it works. If market is coming to the downside and then kisses the meridian line of the pitchfork, it is likely to be propelled to the upside to move into a similar direction. So when I try to measure the distance moved from here to here, it is almost the same as the distance moved from here to the upside.
Wow. Let's first of all start with when you're buying cryptocurrency, for example, you have a speculation. Let's say Bitcoin, a couple of, I think last year, it fell to a record from at least 20,000 to at least 16,000 US dollars per coin. I think that was during 2022, towards the end of the year.
Yeah, which was the COVID crash.
Yes, the COVID crash. And people were saying, okay, here we go. Crypto has crashed. And there was a lot of hula baloo in the markets.
I understand.
And at that point in time, people like you were very strong and said, no, let's keep buying. Let's keep buying. And yes, definitely after a few months, we saw Bitcoin again hitting the 30,000 mark from 60. That's almost double, right? In a space of, I think, 6 months.
Yeah.
How do you see this thing? Where do you get the energy to invest in a market that is literally crashing?
Yeah.
What principles do you rely on?
Okay. Now, before I tell you the principles that I rely on to buy into the markets that are crashing, I'm going to first tell you the principles that I rely on to know that the market is going to crash. Okay. Because if I can explain that this market is going to crash, then I can know that this market is going to go bullish.
Yes.
Now, this is the principle. The crash that you're talking about is this crash. From 60,000 almost to 70,000 around here, and then all the way to the downside.
That was in October 2022.
Yeah, and if you come to know, we traders, we have something that we do call the RSI, the Relative Strength Index. It's this tool that you're seeing down here. Now, what the RSI does, it is that when the RSI it is overbought right here, well, then we expect a reversal in the markets.
What is the RSI?
The RSI is the Relative Strength Index. It is used to compare and know the strength within the markets. You understand? So now, if the RSI is overbought, a reversal is likely to happen. And if it is oversold, still a reversal bullish-wise is likely to play out. But for us, we do not consider the overbought, oversold situation alone. We add in the divergence concept of trading. For example, let me show you something right here. Let me get a certain tool here. Let me get a vertical tool that I'm going to add on this chart. Look at the points that I'm going to label with a blue line. Have you seen that?
Okay.
I'll also add another point right there, and I'll try to extend my chart so that it becomes more visible. Now, with these two added, you can see that the chart was actually giving us a high. Call it, the chart was still going up. You can see that increase, but check what the RSI was doing down here.
It was going down.
The RSI was going down, yet the price is going
up.
Is going up. So the RSI was already signaling that the steam is running out of the markets. Markets are no longer strong enough to hold the price up. So if I saw the RSI moving down like this, that was the time to sell out. Because for me, by the time Bitcoin actually gave us this high, for me I was already with a Bitcoin position which I bought in around here. Around here.
That is in 2020.
Yeah. So this means that if I invested only 30,000 US dollars down here, by the time it reached the top, I had almost doubled my money.
That's right. So you can comfortably sell.
I can comfortably sell. So this is not gambling. It comes with matrices to look at and to understand. So I can still show you this. The same scenario happened before Bitcoin actually went back to 30K. So this is the same reason as to why I bought into Bitcoin when it was crashing so hard. Let me show you. So now Bitcoin down here was the lowest we went after the COVID crash. This low right here. Let me try to mark out the low. That low.
Yeah, that is in around, okay, between October.
We can get actually the actual date. Let me give you the actual date.
Okay.
It was around December 1st of 2022, November, around there. So now, here I was still in the markets, seeing that Bitcoin is crashing.
What price was that?
So the price here was around 15,000.
Wow. Yeah, I think that was the record low.
That was the record low. So I was in the markets, looking at Bitcoin giving me lows. Check this. Bitcoin giving me these lows. And the RSI on the other side, the tool that I told you about. Now I'm using only one tool, but we integrate a lot of tools. But now the RSI alone can play out in the markets and you get money. So, and the RSI on the other hand was giving us highs, signifying that the relative strength index was actually, they are called lower highs, signifying that the relative strength index was actually coming back into the markets. Money was flowing into the markets. More people were buying into the crypto industry.
The relative strength index is an aggregate tracker of all the currencies.
Exactly.
Perfect.
So now, with that done, we saw that Bitcoin started a move to the upside. And if I'm to measure how much would a trader have made if they invested only 10,000 USD. By the way, I'm sorry to talk about that money because that's where I'm used to trading. That's what I normally put in. So that's
10,000 US dollars.
Yeah, 10,000 US. That's an equivalent of around
38 million. Wow.
So you can see that from those lows, Bitcoin went up something like 90% of my money. So if I invested it,
that was in a span of how many months?
Let me see. This is 1 month, December, January, February. Only 3 months.
Wow.
I'm doubling my money. So there is no any other business that can do this in Uganda. It's only crypto that can do this. And these that I'm giving here by the are not financial advisors, but they're just for education purpose. We have to be clear about that.
Yeah.
So you can see that actually after that, Bitcoin gave us all our way this rally to the upside, 90% our money.
Wow.
That's the greatest business anyone can do after you learning how to do it.
Amazing.
Yeah.
Now, still looking at that, during that crash, is it always obvious to buy when things are bad? I've had investors like Warren Buffett always even make quotes like, when the streets are bloody, that's the time for warriors to go out there and fight.
That's it.
Is it always the case, or sometimes there must be care and caution taken as you're seeing the market crash?
Okay, now, if you are a professional trader, you will come to understand that there is something that we call DCA. It's dollar cost averaging. The more it crashes, the more I buy. This is what I'm trying to mean. Let me slightly go to the screen. So, let me slightly go to the screen. I pick some tools. Okay. This is what I'm trying to mean. I mean that if you see Bitcoin around here and then it goes to the downside, I buy more. When it gives me a new low, like up to here, I buy more. When it does this, gives me a move to the upside, I don't care. It goes to the downside, I buy more.
Wow.
So I'm dollar cost averaging in. I'm not entering at once. I have $10,000. But I do not want to enter at once. I can enter with only 1,000 whenever it gives a low.
Yeah.
So at the end of the day, if it starts to go back up, to whatever move it goes back up, I'll be already making money.
That's right.
That's what we call DCA. And that's what Warren Buffett and other big traders are doing on their daily basis. Actually, a trader who has money, they will not even need that analysis that much. As long as you can understand DCA, then you can do that.
Let's talk about, before we go into a break and come back, the fact that you've mentioned that you have to split your money. You don't go in with all the $10,000 and buy at once. First of all, this is $10,000. It's a lot of money. That is one.
Okay.
And probably many young people watching could say, I think I can't afford to buy that much. But what money would you advise someone to actually invest? I've seen people invest their salaries. I've seen some people invest loans, and they have been disappointed. But what kind of money would you advise someone to be able to put aside for investment in such trading? Okay,
now what I always tell people is this: for investing in crypto and stocks, may it be forex, you should invest what you can afford to lose. That's a humble truth. Invest what you can afford to lose. Why am I saying that? You're investing, you do not have an experience like I do. So it means that you're slightly gambler. So if you're a gambler, what you have to do is to invest what you can afford
to lose.
To lose. That's what I can tell you. Another thing is that to me now, I invest like with $10,000. It can feel too huge to you, but for me, I know guys who invest $1 million in the markets on a daily basis. You understand? So it's always what you can afford to lose, and these guys are okay with losing the $1 million, and they still can live
more.
So that's life.
So this is a game where you don't invest your daily transport money that you're using for,
my friend,
for your daily.
You will walk. You walk from work to home, I'm telling you. So it's a business where you have to be that you invest what you can afford to lose.
Thank you so much, Mr. Kanabi. We are going to take a very quick breather. When we return, Mr. Frank, I want us now to look at how different markets relate. We've seen, for example, Apple stocks. When they are moving up, you see that the Bitcoin follows suit.
Okay.
Or vice versa.
Okay.
And you're seeing the Forex as well. Sometimes they follow a trend that can be picked from the stocks and the crypto. How do you relate all these different facets of the financial markets when you're making analysis? Okay, now we're going to, after the break, Mr. Kanabi.
No worries.
Thank you so much, ladies and gentlemen. We are still talking to Mr. Kanabi from MitroPlus Labs, and we're discussing market analysis. Is trading gambling? My name is Anthony. We'll return shortly after this quick breather.